Got
Should we
mics
get it
now.
at 401?
Commissioner Miller, just wanted to check to see if you could hear us.
I can hear you. Yes, sir.
Okay, thank you. We'll now call to order the July 28th, 2025 City of Abilene, Kansas City Commission meeting. Shayla, may we please have a roll call?
Mayor Ryan,
Here.
Commissioner Miller,
Here.
Commissioner Witt,
Here.
Commissioner Meisenberg,
Here.
Commissioner Kohlhoff is absent. Roll call
Okay.
complete.
Could we please stand for the pledge? I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. All right, and our first item is approval of today's agenda.
I move to approve the agenda as written.
I'll second.
Motion has been moved and seconded. Do we have any commission discussion? Seeing none, we'll do a roll call vote. Vice Mayor Miller,
Yes.
Commissioner Witt,
Yes.
Commissioner Meisenberg,
Yes.
myself, yes, motion carries. Our next item is the consent agenda, which consists of the meeting minutes for the July 14th, 2025 regular meeting.
And I move to approve the consent agenda as written.
I'll second.
Motion has been moved and seconded. Do we have any commission discussion? Seeing none, we'll do a roll call vote. Commissioner Witt,
Yes.
Commissioner Meisenberg,
Yes.
Vice Mayor Miller,
Yes.
myself, yes, motion carries. Next item under 6, public comments communications is a public forum. If there's anyone that would like to address the commission on an item not on our current agenda, they may do so at this time. Do we have anyone that would like to address the commission on an item not on our agenda?
Never get this.
Just state your name and address, even though we know.
Yes, Mr. Mayor, my name is Hank Royer. My residence address is 309 North Vine, Abilene, Kansas. I'm a lifelong resident, been active in civic affairs for at least 40 of the last 50 years. First of all, I'd like to give an attaboy to Brad Anderson. I am one who has fussed about the failure to maintain our streets we missed last year. And I would like to commend him and his crew for getting the people out and working on them. It's looking really nice, Brad. Thank you. So that's an attaboy. The other thing I want to talk about is I know you guys are in the budget mode now. I read in the paper, which is where I get my information from the city, which may or may not be accurate, that the city has in the last 5 years shown expenditures are outgrowing revenue. It's suggested that this year, in addition to funding what you normally fund, there's a goal of rebuilding your reserves to at least 15% by 2026. Now, I'm not a rocket scientist, but if you budgeted enough to do what you did last year, but then you got to set aside a chunk for reserves, something's got to give. And I understand that you've been working through that process. I again, don't envy you doing of where you may make cuts for next year. One of the things I have heard, well, before I get there, Abilene, besides you all providing all the infrastructure and the police and the water and all that, also has a component of tourism, which is a major, major part of our economy here. For a little history, I was on the Eisenhower Foundation board for 35 years, vice president for a good portion of those. We knew we had an attraction, but we didn't have any money. We didn't have any way to advertise it. I remember at one annual meeting, the state said they'd put a billboard up out there for us, but we had to pay for it. Well, we didn't have any money. So Mrs. Dieter and Mrs. Duckwall and I wrote a check and paid the state to put up the billboard for the Eisenhower Museum and complex here. I can go on of things like that. I was chairman of or president of the chamber. We didn't have any money to promote the town. It was all just for merchants. Several other organizations I belonged to, we realized we needed to promote it. And in 2003, when I was chairman of the Economic Development Council, I worked with a group of other people here in town, and we got the city to adopt Charter Ordinance number 15, I think it was, to establish the CVB. We knew that we needed to have something, and that was a revenue source, 8% on the transient guest tax, I think it was, is where you get that largely to fund it. We've had three directors there, Marcia Weaver, Glenda Perkis, and Julie Roller Weeks. They each brought certain perspectives to it, and I can tell you, I worked with all three of them, and Julie Roller Weeks is a dynamo that I've never seen before. I handed out something that was just in the Kansas Government Journal this month, just emphasizing what she's done for Abilene and put us on the map. Now, understand, when those people are coming down the interstate, they got money in their pockets. If we get them off up there, they start spending at the gas stations and go all the way to the end of the trail campground down south and drop bucks all the way through here. They not only help all our merchants, but they also pay sales tax, which goes to do a lot of the things our extra local sales taxes. And they're a big plus, and you really need them. And I don't know how Julie's done it I don't even know what her budget is, to be honest with you, but rumor has it that it might be one of the casualties of your austerity program. And I can tell you, you really need to look at what these agents or departments produce for you compared to what they cost. She brings hundreds of thousands of people in here. The sales tax she generates has got to be a lot more than what you're talking about reducing her budget. I really hope that you will rethink that and not reduce her budget, because I don't know what the multiple is, but she brings in money that helps everything: restaurants, gas stations, the Smoky Valley train, the Eisenhower Center, you name it. That is a really important. It's the only department you have that makes money for this city. So please, when you're doing the budget, don't whack her. Look for other places. I could tell you some places, but I don't want to step on anybody else's toes. There's other things that could be economized, but she shouldn't be a victim. So thank you for and I came because you said in the last meeting, according to the Reflector Chronicle, it was said by Commissioners Witt, Miller, and Meisenberg encourage citizens to reach out to them about their thoughts and critiques. So here I am for that. So thank you very much.
Thank you, Hank.
Now I'm gone.
Do we have anyone else that would like to address the commission on an item not on our current agenda? Okay. Seeing none, we will move into our business items. First up is 7A, consider approval of a bid from Denny's Plumbing in the amount of $37,452.23 for the replacement of water service lines at the wastewater treatment plant. Public Works Director Anderson.
Good afternoon, Commissioners. Brad Anderson, Public Works Director. We're here once again today revisiting a new water line installation upon the grounds of the wastewater treatment facility. I did, hopefully you all got it, supply the map to you all about the plans for the lines. It does show the existing lines and then the new plan for installation. We basically simplified it and took out some angles and all that. So we're basically here to try and get approval today so we can move forward. The contract low bidder for the process was Denny's Plumbing, a local plumber, for the amount of $37,452.23. And we were going to pay for this out of the Water Distribution Fund of Water Line Maintenance, which is paying for new lines, basically anywhere we need. Any questions?
I have a question. I think maybe not specific to this, but it's clear that the city employees are doing certain maintenance, new installs. I guess kind of where's the line between what is the work that's done by city employees and contractors?
I think it has to do rather the big thing is whether or not we have to have some KDHE backing and certifications depending on the size of the project that needs done. So when we're doing strictly a repair, we can rely on our employees that have water certifications to do those type of projects. When we're doing a bigger installation, we have no choice but to have KDHE involved at that point. So that's our main mandate for how we decide whether or not we're going to have a contractor back it up, basically.
Is that typically based on whether it's just repairs or new?
Yep. Yeah. New installation has a lot to do with it, obviously.
Are you saying that these plumbers have some KDHE certification that your employees don't?
Generally, yes, they're held, well, I can't answer exactly KDHE certifications, but the project liability would then fall on them and not the city itself.
What is their liability? I mean, we've had some issues with that on some other issues, right? What
In
is-
regards to,
What liability does any contractor have for this project if something goes south or if there's an incident during construction or after?
well, I think most of it would probably have to deal with the warranty. And if you're going to ask me exactly what I don't have that information with me on the warranty work they'd stand behind on this particular project. If that's what you're trying to get to based on other projects.
Generally, in the state of Kansas, on bids that are over $100,000, contractors are required to have a certain amount of liability insurance. That's usually about $1 million. They also have to warranty their work, and they have to be accepted by KDHE as a qualified vendor. Another reason for some jobs not being done by city staff as opposed to contractors is city staff has just enough people to take care of maintenance and repairs, but to do entire replacement of segments of the distribution system would be beyond their ability, not because of their qualifications or their ability to do the work. We frankly just don't have enough people for that size of a project. And if we tried it, it would take them much longer than a contractor, and it would take them away from normal maintenance.
Yeah, that's where I was going to go next. The amount of time factored in the day-to-day 8-hour workday for city staff to complete this compared to a contractor coming in and routinely being able to take care of this project in a more timely manner.
I guess I still have my question then. I guess where's that line? If the contractor is going to be more effective and more efficient at these types of projects, should we have contractors doing all of our projects?
My my basic answer would be that'd be phenomenal, but there's a lot of we try and fix what we can on smaller projects, but I guess in my opinion on this particular project, it's a little bit more than what we'd want to bite off. We've been in a situation before where we've had multiple breaks in the city at once, and it's just too much for us. So we have to bring in someone to help with another project in an emergency situation. And basically we have a city crew doing what we can, and we have a contracting crew doing what they can on separate entities. And those are examples I can give you before my time where I was here. I know last summer was extremely difficult with a specific contractor in town where we had multiple water line hits and breaks at any given time. And we were in complete scramble mode on more than one occasion in different parts of the town. Once again, my reasoning for this is we've already battled break after break and water leak after water leak out here, and we're just trying to replace everything with new so we can move forward, not have to worry about the situations, because we've had these breaks happen in the middle of the summer, and we've had them happen in the middle of the winter, and I think a lot of it is stress on the pipes when you have changing conditions, and that's the main times when you see these.
We might need to put this as an agenda item or at least a discussion item at another date, but I just want to make sure that the city was reimbursed for any expenses by those contractors or what that process is for any additional labor that we had as a result of water line or other city utility strikes.
From
Line
last
breaks.
summer.
Mm-hmm.
Well, I think we've already, I'll relook into that and I can maybe report back, but we had a list of them at the close of that contract last year of all the reimbursements and the cost. We kept track of all of our man hours, our equipment hours, every time those situations that I think you're talking about were taking place.
Okay.
And so I think we squared up on that to my knowledge.
Okay. Yeah, I would like to see that, please.
Yeah. I think it was a pretty long list.
I'm sure it was.
Okay, if there's no other questions, yeah, we'd like to approve this today so we can move forward if possible.
Do you have any further questions for city staff on this item? Okay,
I'll make a motion to approve the bid from Denny's Plumbing in the amount of $37,452.23 for the replacement of water service lines at the wastewater treatment plant.
I'll second.
motion has been moved and seconded. Do we have any commission discussion? Seeing none, we do roll call vote. Commissioner Kolhoff,
Aye.
Commissioner Meisenberg,
Yes.
Vice Mayor Miller,
Yes.
Commissioner Witt,
Yes.
myself, yes, motion carries. Our next item is 7B, consider approval of authorization for the mayor to sign the lease purchase agreement documents for the lease payment to First Bank for the street sweeper, interim city manager Quinn Day.
The street sweeper lease agreement was approved by the commission on June 9th of this year. The bank has sent the lease agreement and has the interim city manager's name down. Generally, when municipality enters into a lease agreement or a multi-year contract, it's preferable to have the mayor of the governing body sign the agreement with the commission's approval. It's not unheard of that a city manager signs it, but generally to do so, it would be memorialized in the minutes that the commission authorized the city manager to do that. That's not in the minutes for this June 9th approval. So staff is asking for the commission to approve the lease payment agreement for the street sweeper previously approved by the commission and authorize either the mayor to sign the required documents or the interim city manager.
Have we taken delivery of that unit already?
Yes, I believe so.
And I personally have no preference whether you'd prefer myself or Mr. Quinn Day to sign the document.
The documents provided by First Bank have me and I believe the city clerk signing those.
All right, I'll make a motion to authorize the mayor to sign the lease purchase agreement documents for the lease payment of First Bank for the street sweeper.
I'll second.
Motion has been moved and seconded. Do we have any commission discussion? Just make my probably fourth or fifth point of note. First Bank is not the bank that I work for. It's a separate entity. So, do we have any further commission discussion? Seeing none, would a roll call vote? Commissioner Meisenberg,
Yes.
Vice Mayor Miller,
Yes.
Commissioner Witt,
Yes.
Commissioner Kolhoff,
Nay.
myself, yes, motion carries. Next item is 7C, consider approval of authorization for the mayor to sign the incumbency certificate and lease payment agreement with Community First National Bank for the lease payment to Rosenbauer SD for the fire truck chassis, interim city manager Quinn Day.
This is a payment request from Rosenbauer SD for payment from the equipment acquisition fund from Community First National Bank. The staff recommends that the payment be made. The chassis is completed. It's in the process. So we'll be asking the commission to authorize the mayor to sign the payment request form, which is Exhibit A in your packet, and also the incumbency certificate, which certifies that the mayor is duly qualified and acting on behalf of the city of Abilene.
Questions for staff on this item? I did have one quick question for you. Lease purchase approved July 24th of 23. That stated in the packet. I noticed that when I was reading it online.
Or the incumbency certificate?
Yeah. It's just on that one pager.
Yeah, that would be the date, to my understanding, that the commission approved the lease purchase agreement for the chassis to be built. Now that the chassis is built and going to the next step, they're asking for payment for that portion. And it generally can take a year to 2 years before a
Mhm.
fire truck's completely built.
Yeah, I noticed that time discrepancy, so I
Yeah.
just kind of wanted to make a point of that, of the reasoning why. Any further questions for city staff on this item?
I'll make a motion to approve and authorize for the mayor to sign the incumbency certificate and lease purchase payment agreement with Community First National Bank for the lease payment to Rosenbauer SD for the fire truck chassis.
I'll second.
Motion has been moved and seconded. Do we have any commission discussion? Seeing none, would roll call vote. Vice Mayor Miller,
Yes.
Commissioner Witt,
Yes.
Commissioner Koloff.
Aye.
Commissioner Meisenberg,
Yes.
myself, yes, motion carries. Thank you. Our next item is considering a motion to recess.
I'll make a motion to recess the Abilene City Commission meeting and the study session resuming here at 4:30.
Second?
Motion has been moved and seconded. Do we have any commission discussion? Seeing none, would roll call vote. Commissioner Witt,
Yes.
Commissioner Koloff.
Aye.
Commissioner Meisenberg,
Yes.
Vice Mayor Miller,
Yes.
myself, yes, motion carries. We are in recess. We'll now call to order the July 28th, 2025 City of Abilene, Kansas City Commission study session. Our first item on the study session agenda is 2A 2024 audit review. April Swartz with Varney and Associates.
Good afternoon.
Good afternoon.
Thank you for allowing me to join via Zoom. We had a company meeting here. I couldn't get away. I do believe you have bound copies in front of you of the audit. We brought them over on Friday. So if you will take the letter that is loose from the audit binder, we're going to go through the letter first. I will say we worked this year with Leanne, and then of course we finished up with Kelsey and John after the transition. This year, Abilene underwent a software change, and it appeared to go very smoothly. When we did the audit, it looked like everything rolled over correctly, and the issues that you experienced with your prior software had been remediated, which is great. Was the whole point of the transition. The letter itself is called our governance letter. So although we work with administration, we're working for you, the governing body. The letter communicates certain things to you. First and foremost, we talk about the fact that your financials are prepared on the Kansas KMAG regulatory basis. As are about 99% of the cities in Kansas use this same reporting method. We also bring to your attention if there were any issues or concerns with the audit. We had no issues or concerns. We are a little delayed this year. When we initially started the work in April, Leanne felt like we were going to be required to perform a single audit for your city this year due to the federal expenditures on the airport fund. But after further diving into the information and visiting with the grant administrator, your receipts exceeded the threshold, but the expenditures of federal dollars did not. So we did not have to do that single audit. And so then we went ahead then and wrapped up the financial statement audit. If there had been any issues or concerns, as I mentioned, they would be in the letter. The letter is considered a clean letter. We did not have any recommendations as far as controls or anything around those areas. We feel like Abilene does separate your duties quite well. And so no concerns to note in the letter. Any questions on the letter? All right, then moving into the audited financials in your burgundy binder, pages 1, 2, and 3 are the auditor's opinion, the auditor's report. As I mentioned, you follow the regulatory basis. So if you look at the third paragraph of that opinion, you'll see that we give you the unmodified opinion or a clean opinion on your financial statements. This is similar to what Abilene has received in the past. It is a clean opinion. And we also do point out there next to the bottom paragraph that the responsibility of the financial actually belongs with you. Our job as auditors is to express an opinion as to whether we feel they're fairly stated in all material respects, which we do. So clean opinion. Turning on then to pages 4 and 5, this is the actual financial statement for the city. Down the left-hand side are all the funds that the city uses to account for the income and expenditures for the city. We start with your unencumbered cash from the prior year. We show receipts by fund, expenditures by fund, and then ending unencumbered cash. That is the amount that's used to carry forward in your next budget. Then we add back any outstanding encumbrances or accounts payable at year end that have not been paid so that we come to your reconciled bank balance by fund there in your far right-hand column. So if you look at page 5, you can see that the total, you started the year with $7,702,114. The city took in $18,920,861. You expended $21,657,593, leaving you with unencumbered cash of $4,965,382. Over in the far right-hand column, the reconciled cash for the city was $5,268,477. You can see that $149,799 of that is part of that PBC, that investment you have out there that makes the bond payment. But the balance of the funds belong to the city. We do back out agency funds of $103,000. Those are funds that the city's holding that do not belong to the city. And I'll show you where that comes from at the back of the report when we get back there. Any questions on this? The next several pages are the notes to the financials. There were no new required notes this year. So these notes are required by KMAG. They do give the reader more information about your city, the policies you follow, the budgetary basis, and all the different things related to the city. I do always like to go through the debt footnote, which is on it's page 10 in your report if you're looking at the paper copy. You started the year off, you had some GO bonds, you have your public building commission bond, and then you have some lease purchases. So on your total debt at the beginning of the year was 23,399,894. Your new debt was 787,296, which was a pumper truck. Your payments that were made during the year were $2,002,462. And the remaining balance of debt was 22,184,728, with 929,322 being paid in interest on the debt. Page 11 shows the maturities of the debt. The first 5 years are individually listed, and then they're in buckets of 5 years thereafter. If you will turn now to page 16 in your binder, this is where we demonstrate the city's compliance with the budget laws of Kansas. We did have one fund this year that was over budget. The sales tax street fund was over budget by $1,073,238. You can see that there on the far right-hand column. It's the only number that's not in brackets. There were transfers made into that fund this year from other funds, and then expenditures were paid, but the budget did not get amended. And so that is considered a budget violation. If you back up, excuse you having to back up, but if you back up to page number 8, in the middle, you'll see note 3. That's where we cite the fact that the expenditures in that fund did exceed the adopted budget for the year.
What are the consequences of that?
In my history of doing this work in 35 years, I've never seen any consequences of that. It's very important to stay within those budget guidelines, but I don't believe there will be any administrative action on the state's part regarding that. I feel like it was probably an oversight by staff to realize that in order to spend those monies they brought in, they would have to amend the budget. It is not a tax levied fund, so there would have been no impact to the taxpayer. It's simply you just didn't have the authority to spend in that fund. Any more questions on that? All right, the rest of the report, starting on page 17, begins with the general fund. The general fund is your largest fund, and so it has multiple pages. I won't go through every fund, but we'll walk through the general fund to give you an idea of how they're laid out. On page 17, you see your general fund revenues. So you can see your budgeted amounts, your actual amounts, and then your prior year amounts. So as you go through there, you can see one of the big changes was in licenses and fees. It was quite a bit higher this year. The reason for that is you received some funding for a housing project. You brought the money in and then you spent the money. So really it was a one-time increase there in that licenses and fees line. The variance was $391,000 and the grant that was brought in was $360,000, or the revenue. And then when we look at the expenditures, you'll see the other side where it went back out. So that was just a one-time change. Everything else was pretty consistent with prior year. Page 18 starts the expenditures for the general fund. There are different departments in the general fund, so you'll see those broken out here. And there in the very first department, administration, you can see the line services and supplies is over budget by $365,263. That is the payout of that $360,000 funding that you received. This is not considered a budget violation in the general fund because it's by fund in total. So a department can be over budget as long as the fund in total is not. So the general fund does not have a budget violation. But as you go down through, you can see each of the departments and you can see actual compared to budget and kind of how those came out at the end of the year. But again, if you look on page 19 at the bottom of the page, you will see that your general fund was under budget in total by $647,549. And as I said before, the only fund that was over was your sales tax street fund.
I have a couple questions here.
Okay.
I guess first, as it relates to those grant funds, I guess the accounting for that does not seem very intuitive. Having that in licenses and fees only be reimbursed under services and supplies. Is there a better way to account for that so that that's more intuitive?
In hindsight, they should have probably put it in a grant fund, in a grant line or miscellaneous line. I don't know the rationale for putting it there. As far as the audit goes, it was properly recorded. The classification would be more of a city determination.
I guess, and my last question there, and maybe that's something we can talk about with staff as far as how we do that in the future, but the fund balance reserve, I know we have a fund balance reserve line item on a number of different department budgets. Can you explain that?
So when you prepare your annual budget, as you're getting ready to work on today, there is a line on each fund that says fund balance reserve or reserve, cash reserve. And so you put that there in order to get your mill levy where you want it. But we have to put it somewhere on the document because it is an extra amount you've budgeted for, assuming that if you had a reserve, you would transfer. So that's why it's labeled the way it is. It accounts for that $1 million that in 2024 you budgeted as a cash reserve. If you look at your 2024 budget, you'll see that $1 million sitting in that column as an expenditure item. And so it has to be picked up as an expenditure line item on the audit. Does that help?
Well, I think it kind of helps, but we assessed that out of the ad valorem taxes, correct? That $1 million. We were actually in receipt of that.
No, not necessarily in receipt of it. In your budget, you use the line item that says cash reserve, which is allowed by cities and counties to use to give you extra flexibility within your budget. And so when you spent the money you collected, nothing gets posted against that fund balance reserve, but we still have to show that to equal your total budget for the fund. So essentially, if you got to the end of the year and you said, I still have a $2 million in cash, I have $1 million in budget room, I'm going to move $1 million of that over to a reserve account. You didn't do that, but you gave yourself the spending authority to do that.
Thank you.
Does that help?
Yes.
Okay, so then the rest of the pages of the report are all the additional funds, which I won't go through each fund on its own, but I did want to draw attention. If you'll turn to page 25 of the document, excuse me, it's going to be 25 of my PDF. It's going to be page 23 for you. After we completed the audit, I came over on Friday to assist Kelsey with some budget work, and we discovered that after Leanne closed the year and sent us the trial balance, there was one more additional entry posted that we did not get. And so I want to point out, we do plan to make this change, but there was no time to make the change and get you bound reports. So again, a client entry that we did not get, she transferred $5,673 worth of expenditures out of this special alcohol fund back over to the general fund. So it's not a large amount, but we will make that change. And so the end result is in your 24 actual column under expenditures, awards, and contributions, the 16,278 will actually become 10,605, and the ending cash will increase from 7,526 to 13,199. We're not sure how it happened, but Kelsey was able to isolate the entry. We could see what she did, but it was done after we were sent the year-end reports for the audit. So that change will be made, and we'll issue new electronic copies. And any of you that want a new bound copy, we're happy to print you a new bound copy as well. And then finally, on the very last, next to the last page of the report, I mentioned up there, we subtract out agency funds that don't belong to the city. So on page 47 of your report, you can see where that $103,000 comes from. Municipal court bond money does not belong to the city, so it is sitting there. Payroll clearing, in this case, at the end of the year, it was actually a debit balance, but that's the clearing of employee withholding that comes out of paychecks and or payments that clear, and then the medical expense reimbursement plan that is also belongs to employees that they've taken out of their paychecks. And so that's why these amounts get subtracted on the front page, because this money does not belong to the city. Any questions? All right, if not, that would be my presentation. If you have questions later, don't hesitate to reach out. We're available year round. for assistance?
I did have, I'm sorry, I do have a couple of questions on some of the specific funds. On page 27 of the report, it looks like there's a discrepancy between the cash ending balance on December 31, 2023 and January 1, 2024.
You're right, there is. I'll look at that and see why.
And then
There
in
should
the,
not be.
okay, and there was a budget of $88,000 for employee benefit, and I don't remember that sailing through our budget process last year. I didn't know if you had any, we obviously didn't spend any of it, so I'm curious if you had any insight on what that was.
No, it comes right off your budget document. So I would not know what that was. Obviously, nothing was hit against it, but it did come directly off your budget document.
Okay. I just have a couple more fund specific questions here, I think. On our, this is page 32 of our document here. The CID sales tax fund, there was a negative starting balance. I realize that's in 2023, but that should just be a reimbursement account where we collect funds, and I think we retain a certain percentage of those before reimbursing those out to developers. Can you tell me what might have happened there?
I do not know. That would be a question for staff. At the end of 2023 or at the end of
That's actually the
2022, it was-
beginning. Yeah.
Yeah, so at the end of 22 or of 22, it would have been negative. The only way I could understand is that they paid something out before they got reimbursed. But that would maybe be a question for administration.
Commissioner Koloff, I can answer that because I assisted with that. There was around that time period an erroneous double payment issued to the developer that staff advised me of, and we made demand on the developer to reimburse that. That either occurred or it was set off against future payments owing to the developer.
Thank you. I think, let me get back on track here. And this is maybe more of an accounting thing on page 37. This is under the land bank fund. We have it as a line item as cost of lots, which is really, I believe, a commission that's being paid to a third party. The lots all belong to the land bank, so we have no real true cost.
Okay, so if whatever name the management would like on that, we can make that change when we make the other change we're making.
I think maybe one more. Oh, that's it. Thank you.
Right, thank you very much. And like I said, we will get new electronic copies to you. I will check on that one question you asked about. It's weird, the difference is almost exactly the difference of the entry we're making on the special alcohol fund. So I'm wondering if it's not general, it was that fund instead, because our difference is 5673 and this difference is 5669 or something like that. So I will follow up on that and we'll get you corrected copies.
Thank you.
Thank you very much.
You have a timeline on when you're planning to send those electronic copies out?
Yeah, we'll get that corrected probably yet today and we'll have the revised electronic copy to you by tomorrow.
Okay, perfect.
Thank you.
All right, thank you. All right, and our next item is 2B 2026 budget review, tax levied funds, interim city manager Quinde.
Before we go into the 2026 levying funds, there's been some questions from commissioners on how did we get here? So I'd like to go over some things that I can point to and identify. I'm looking mostly at 2024, but there is a spreadsheet that I handed you that goes back, I believe, till 2019. Frankly, I just haven't had the time to go back 5 or 6 years to see. So the first item that you see there, and it should be the first one that you have, this is the from the 2024 adopted budget. And if you look at that, it tells you what the transfers for. In the right column, it says proposed amount for 2024. And there goes from all the funds, the amount, and what fund it's going to. But when you look at the audit that was just presented to you, which is on the next page, you'll see that there were 4 transfers that were not in the 2024 budget. There was two transfers from the general fund. One was from the general fund to the sales tax street fund for 150,000. One from the general fund, to the special highway fund for 150,000. And then from the special highway to sales tax street fund for 400 and capital improvement to sales tax street fund for another 400,000. I bring that up as in governmental accounting, each fund is treated as a separate entity. It's not just one pool of money. And transferring money between funds is not simply just transferring money. It's actually changing the purpose of the fund. So that requires in Kansas by statute, a budget amendment. The commission did do a budget amendment in December of 2024. I was just looking at the ordinance and it authorizes the city manager to make amendments or changes to the budget for personnel, salary adjustments and interfund transfers. So it's a question that I'll have for April with the auditor once we're done here, making sure that the ordinance properly covers this. But I bring that up because that, as you'll see later, is taking money from one fund that's not budgeted for, which harms that fund. The next page is also from the audit that you just saw. And you can see there that the general fund, the certified budget was $7.4 million. And the expenditures charged to the general fund was $6.8 million. The variance was $647,000 under budget. That sounds great, but as Commissioner Kohoff alluded to earlier, the budget has $1 million budgeted for cash carryover or reserve. So if we're doing things properly, I shouldn't say properly, if we're being prudent, that number should always be under budget by at least $1 million. It should be more than $1 million, but the purpose of that is so that you have cash moving into the new year. On January 1st, municipalities just don't get all the money that, that they levy in property taxes and fees. It comes in payments over the year from the county clerk. So that is one indicator there that we're running into an issue as far as our revenues or our reserves being less. That should always be $1 million or more in that one that's highlighted. Also, you can see on the sales tax street fund, I won't belabor it, but like the auditor pointed out, the budget was 1.1 million. We spent 2.2. We're over budget by $1 million and 73,000. The water utility fund, it's not over budget. It was certified budget was 2.5. Charges to that budget was 2.5. The difference, it was under budget by $12,000. That's running a little thin for a utility fund. Municipal utilities, whether it's water, electric, wastewater, sewer, storm, even sanitation, they're not for profit, but you should always have enough that you have your fund balance reserve, and the policy says 15%, and then you should have enough to put into your reserve funds based on your 5 or 10-year plan, which is adopted. The next page shows you the another point that I can track back, that if you look at page 17 on the bottom of the audit that you just received, but you'll see that the ad valorem property tax in 2023, the actual was 1.9 million. The actual for 24 was 1,965,000, but budgeted was 2,012,000, a difference of $46,000. One thing that's not being accounted for in the budget annually is what's called a delinquency rate. So when you're doing the budget and you're deciding, okay, this is how much revenue we need, if you don't put a delinquency rate in there, you're assuming that 100% of everybody's paying their property taxes. It's not realistic. You can either go back and look historically what that has been, or the Department of Administration, Municipal Services will tell you this is about what it's trending for in your part of the state. Usually 3 to 5%. I've never seen it higher than 7. But what you do is, if you need $2 million and you have a 3% delinquency rate, then you budget for revenue needs of $2,060,000. That way, if you do have a 3% delinquency rate, you're getting the revenue you need. If you don't, you're going to fall short. Now, $46,000 doesn't seem like a lot, but over a series of years, it adds up quickly. Delinquent tax, which is the next one. People who do pay their delinquent taxes, the city gets their share of it, but you can see here that in 23, the actual collection was 21,000. In 24, it was 11,000, but we're budgeting revenue of 30,000. So we're budgeting more than we've historically received in delinquent tax. And then if you go to the next page, page 18 of the audit, this is the general fund by department. And you can see there under administration towards the top, services and supplies, the actual cost or expenditures was $506,000. But in 24, we budgeted 346, which you can see in the yellow, but we actually spent 712,000. So we were $365,000 over budget. Now the auditor said that 360 of that was for an MIH reimbursement. As Commissioner Kohlhoff asked about where should we put that revenue so it's makes more sense. But even then, we're not budgeting what our expenditures have been historically. In police and in fire, we have in 23 in police, we had $15,286 in capital outlay actually spent. 24, we budgeted 0, but we spent 13,509. Fire department, in 23, we spent 770 in capital outlay, budgeted 0, spent 765. So these are recurring expenses that we have. I don't know if they're categorized as capital outlay or what they are, but what that's showing me is that we're not budgeting based on historical expenditures. If you go to the next page, which is page 19, it's the same. You can see here in the other departments where you have in service and supplies, $71,000 spent in 23, but we budgeted 22,000 and spent 51,000. Again, we have 25,000 spent for service and supplies at the senior center. We budgeted 24,000, but spent 33. And you can see, I won't go through all of those, but towards the bottom of there, you can see that the transfers out. We budgeted $349,000 to transfer out of the general fund, but we transferred out 677,000. So at the very beginning, I showed you that schedule of transfers where we transferred more money than by amending the budget, but that puts the general fund deeper in the hole. And you can see that right under that line, it shows fund balance reserve, $1 million. And it shows it in brackets, which means we didn't spend it. But the total receipts or total expenditures were only over budget by 600 or under budget by 647. As I mentioned before, that should always be at least $1 million. We should never touch that cash reserve unless there's an emergency. I'm going pretty quick. Are there any questions so far? Okay, and the sales tax street fund, I won't, the auditor hit on this. We budgeted $300,000 in sales tax revenue, brought in 276. We did not budget any transfers into that fund, but we transferred in $1.38 million. We budgeted to spend 1 million, but spent 2.189. Yes, sir.
I wanted to ask you about the sales tax number. I meant to actually, that was the one I was looking for the auditor. We were over budget on our expected sales tax for the city general fund, but under budget here. And I was wondering how that happened.
My assumption would be that the if the county has a countywide retailer sales tax, then the municipalities within there get a portion of that. And there is a formula that's sent by the state each time. And they multiply the sales tax revenue by a decimal point, and that's what we get. So this one, it would be just for within the city limits.
I guess, just so I'm clear, I think it's, I think I have it flagged here. And you might have it in front of you there for the local sales tax on your audit.
No, I don't have the whole book with me.
Okay.
Sorry.
It's, I guess, page 17, we were just on it. So we had a budget of 1.6, but an actual of 1.774. And this is just the local sales tax.
Right.
I'm assuming the sales tax street fund is our special
Yes,
sales tax,
yes.
1/4%. So I guess I'm just curious why it wouldn't be linear with the expectations for the general sales tax. Does that make sense?
Yes, the
Okay.
general sales tax showed estimating 1.6 million in revenue. That's just a conservative estimate, even though the trend is about 1.7. So you'll see that sometimes with people will, if they historically have $1 million in sales tax, they may only budget 900,000 just because sales tax can fluctuate based on the number of visitors. You'll see that a lot of times also with utilities like water, especially if you're in an area that has water restrictions or a heavy user. If you average $2 million in revenue from your water utility, they may only budget 1.8 just because of the fluctuation if there's mandatory restrictions. I'm not sure if that answers your question, but
I might not be asking the question clearly here. I guess I would have assumed we would have made the same assumption for revenue for both general sales tax and the street sales tax. Does that make sense?
yes, you
So-
should have. It doesn't look
yeah.
like you did.
Okay. Yeah, and maybe that's the issue. I just maybe just a footnote that we look at that going forward. So that if our numbers are wrong, they're at least in agreement
Yeah.
that they're wrong.
What we should do is for any type of revenue, say sales tax, you have several of them. We should look at the historical numbers, and if for discussion purposes, if your sales tax is bringing $500,000 a year, pretty regular, plus or minus say $20,000, then it's a policy decision. Do we budget exactly what we think we're going to get, or do we budget conservatively? Did we budget 400,000? And if we make more, great. If we don't find ourselves in a pickle because we don't have the revenue that we expected. You had alluded to something with the auditor about how we do things in the future and policies. And there are several that once the budget season is over that we plan to bring to the commission for consideration. Some of those are those types of things. So there's clear guidance on exactly how we handle each fund, how we budget things, those types of things.
I guess while we're talking about that, the MIH funds that were essentially just a pass through from commerce to the city onto the developer. I mean, it creates an issue in our books. Is that, I mean, it looks bad the way we have it accounted for, right? And
Correct.
really, it's not anything other than an accounting issue, in my opinion. Do you share the same opinion on that?
Yes, ideally that would be listed as either other government revenue or grants. And just listed as a grant and then MIH grant. You have plenty of lines where you can list all of them, and you'll see in the 2026 levying funds that we have $104,000 listed for a potential grant. Doesn't mean we're going to get it, but we're accounting for it, and we list it as that.
This might be a question for Shayla. Do you remember the timing of the street sales tax? Because that was allowed to lapse and then was approved. Was that less than a full year in 24?
I believe it started the second quarter of 2024. Is that right, Brad?
So it's possible we made a full year assumption or something like that.
Yeah, I think it went into effect April 1. That sounds, yeah. So you can roughly do, add a quarter to it, or gross it up by 25%, but.
And then the last thing that you have in front of you is, this is from the quarterly treasurer's report that gets published in the paper from 2019. And I just want to show a couple of things where you can see that in the general fund, which is the top line, you have an ending balance in 2019 of 2.3 million, 1.7 the next year, 1.9, 2.4, 2.3, 1.9. Those are all pretty much in range. Then you look at 2024 and you ended with $1.1 million. So there's a big drop. And then the ending balance, which is in the quarterly treasurer's report, is different than the audit report. You can see that the treasurer's report shows 1.1 million. The audit shows 1.3 million, the difference of $172,000. So there's some tightening up that we can do with the software that the commission recently authorized. For example, instead of doing purchase orders paper, how I prefer to do things a long time ago, The software that you authorized, if somebody needs to make a requisition, they put it into the computer, put in the account code they want to charge it to, and right then it tells them how much money they have left in that. So there's no reason they should go over. And if it is over budget, it doesn't get approved unless somebody overrides it. That takes either, depending on the commission's policy, either the finance director or the city manager. So those are one of the tools that you already have in place. It just hasn't been implemented. You can see on the others how the ones that I have colored, water drops from $888,000 down to $437. Sewer drops from 585 to 322. The ones that are in purple, those are just to highlight, those are some concerning areas, even though they're in the past. But generally, your self-insured health account should have around 215,000. But there's been times when it's been as low as 75,000 or 110. Now, normally, if you have 1 year that's that low by itself, it's an outlier. You probably had a lot of usage. Maybe you had a significant health event from an employee or multiple employees. But you can see in 21, 22, and 23, it drops from 270 to 157 to 110 to 75. So in 24, it jumps back up to 271. Money had to come from somewhere, and it's being levied as part of the personnel benefits. Capital improvement, you can see that just everything's going fine. You have some dips there. 22, it dropped, but it dropped from 419,000 down to 53,000. And I would attribute that to money being transferred from capital improvement to the street sales tax fund. And then again, to get that back up to do the projects that you want, you're going to either have to start saving money or levying it there. Any questions on that one? And you can see a couple of the charts, and I'm not sure if Kelly has them up. Might be the last page. Okay, I didn't give her the whole thing, but and what you have in front of you, you can see there that the charts show you how much those drop down. The general fund, the bottom starts 2019, and you can see 2024, the difference. And then the second chart is just for illustrative purposes, they're actual numbers, but it shows you how the rec commission and capital improvement, where those balances all of a sudden in 2024 ending balance just dropped. If you look at capital improvements, it's barely there in those graphs. In a nutshell, without going back farther, those are a lot of the things that will change it. The good news is you have the tools to control some of those expenditures, and we just need to implement them. And the better news is that you have department directors who want those tools, and they want to know exactly what's going on financially. And I'm not sure that they had a clear picture provided to them. So if we move into the 2026 budget for levying funds.
Really, before you jump into that, can you
Yeah.
explain the difference between the actual ending balance or the accounting ending balance and the audited ending balance?
I can explain a little bit, but not exactly, because the ending balance that's bracketed there in the bold lines is what was in the quarterly treasurer's report, the actual, what came from the audit. Now, those can be due to unencumbered expenses or revenues, but what they are is not clear yet. I still need to get with the auditor and say, okay, what's the difference there? Because on one, you're talking $172,000. It's possible that you had that much in outstanding revenues, because the balance does go up. It's not like we're reporting that we have less than we actually did.
We're all on cash basis accounting though, correct?
Yes.
Okay. Thank you.
For the levying funds, if we go to make sure I'm on the right page, there's all together. Should be the next one there. It's page number 7 at the bottom, and it says fund page for funds with the tax levy. You can see I've got an area that's bracketed in red. I don't think you can see it up on the screen, But I'm looking at the motor vehicle tax, recreational vehicle tax, the 1620 vehicle tax, commercial vehicle, and watercraft. Those numbers are provided by the state of Kansas as estimates based on what they're seeing. Then if you look at grants, there's $104,000 where the police department had a congressionally directed spending request that was submitted by Senator Moran. Doesn't mean we're going to get it, but we've got that in there to account for revenue. We don't get the revenue, we don't spend it for the item. You go to the next page. This is where the expenditures are for the general fund. These are just categorized by departments, but you can see that the administration, that dropped from 771,913 to 657,342. And that is movement and personnel. We moved one person from administration into community development, which you can see the other arrow points down there where there's increased. And then the next two would be the police and streets and alleys. In 2026, we reduced the police department by one police officer and public works by one maintenance person. The rest of those items you'll see, okay, well, they're increasing. We had a 12% projected increase in health insurance, and our property and casualty insurance has grown from around $276,000 a year to well over $400,000 a year. So those are things, as I mentioned in previous correspondence with the commission, those and our service contracts for phone, internet that are not favorable to the city, that we need to start going out and looking for more favorable agreements. But those aren't things that we can put in the 26 budget now because we're held to those. Some of those contracts don't expire for a couple years. But that doesn't keep us from going out and renegotiating those contracts. And we have meetings scheduled with those folks in the coming weeks to see what we can do. And if we can get those reduced or more favorable terms, those reduces those expenditures, which helps us into 2027. And if you look down at the very bottom of that same page where it says cash reserve 2026, we generally keep $1 million in there for cash carryover. To keep the budget at 47.556 mils or below, 290,000 is all you can carry over. So as you remember, I've said in a couple meetings before, we're not going to fix this issue in 1 year. It's going to take several years. And that's by building up back that cash reserve, reducing expenses. I also brought up how we can cross-train, and that in the short time I've been here and since I've said that, your employees do a great job now of helping each other out. And I'll use Public Works, for example. The amount of work that they do, they don't have that many employees, but they help each other out. So if there's water breaks, the street department helps the water department. Water department helps the street department. And I can say that about all of them, whether it's parks, recreation, they're all helping each other now. So are there other efficiencies? Yes, but they're doing a great job of doing more by helping each other out. Are there any questions on that page? If not, I'll go to the next one, which is the general fund detail, and it talks about departments in the general fund. The first one is administration. As you can see, the salaries, benefits drops, and that is a shift in personnel from administration to community development. And then as you go down, your copy should have green brackets around contractual and commodities. Each one of those green brackets means that they've reduced those total expenses. Now, if you look in previous years, in some of these funds, everything was lumped together. So if you drop down to, let's say police, right after administration. In prior years, everything was lumped together in commodities. Well, everything's not a commodity. A commodity is something that you use and you consume, whether that's paper, fuel, tires, and contractual are things like software subscriptions or professional services. Yes.
I don't think we don't have the right slide up here. I just want to, for the people who are watching it remotely here, I want to make sure we're on the same page, if you don't mind.
Can you hear me? Go ahead and move it. And going. Okay, right there. Thank you.
This is actually the second page just for,
Go back one, Kelly. One more. Can you go back one more after that? Yeah, it's not coming up right. Go ahead and go back to the one that you were with the green box.
Flowing through a little differently
there you
on
go.
the.
There
There
you
you
go.
go. That's
Yeah,
the one.
There you go.
So you can see there the shift in personnel administration, and you can see that every green box means that they cut expenses. But I want to point out that another thing that the city can do to be more fiscally responsible is not lump everything into one category. You can see in previous years, everything's either lumped into commodities or capital outlay. And like I mentioned, commodities are consumables, capital outlay are things you're fixing into a building, or and then contractual would be software agreements. The police department has flock cameras, those types of things. The departments actually have multiple line items that fit under each one of these four categories. And we're going to work together to clean those up and that they're all the same. There shouldn't be 6, 7, or 8 line items for each department. It should be 5 or 6 at the most. You can categorize those into them. So that's one thing that we can do moving forward, is to better separate our expenses. So not only the department directors can see what they're spending on, the commission can see what they're spending it on, and the public can as well. If you go to the next page, you'll see the same thing. Those green boxes mean that they're dropping their expenses. I'll pick one out here for parks. Previously, they spent $108,000, which was all lumped together in commodities. We broke it out by category, and they're spending, looks like $102,000. So everybody has made contributions to cut. Next page, Kelly. And then earlier you had me talk about, or you've heard me talk about that some positions were not, we budgeted for the positions that were filled, but not was authorized. I've highlighted municipal court here, where you can see that how it goes from 93,000 to 56,000 to $121,000. So what we've done now is we're budgeting for every authorized position, but we may not fill them. But if there's that need, then we will. For example, currently the police department has 4 openings, a police chief opening and 3 patrol officers, and Public Works has 2 openings. The police department is filling 2 of the patrol officers, and eventually we'll fill the police chief position. That leaves 1 unfilled that we're not going to fill this year or next year. And Public Works has 2 openings. They'll fill 1 this year if they find the right person, but we're not filling the other one as a means to save money.
are you anticipating that for both 25 and 26 on the Public Works?
There's 2 openings now in Public Works. If Brad finds the right one, we'll hire him. If not, they'll stay open until he does. But in 26, he can only hire 1. Both years, he can only hire 1.
Thank you.
Yes. You'll have to switch a couple of pages to get to the airport. You'll see that in the airport fund. You go a couple, Kelly. There you go. So in the airport fund, you can see that in 2026 that our revenue and our expenses match. That means is we don't have the grants, we're not spending any money. Before I started as the interim, I remember there being a discussion about building 6 hangars or 4 or 8 hangars. We've met with KDOT and with the engineers about that project. There was a $243,000 insurance settlement for some damage that was done. So the city staff wrote a grant, the KDOT Airport Improvement Program, for $243,000. It's a 50-50 grant to build 4 hangars. And that was the grant application. When we met with KDOT, the grant application did not say you're mixing state money and federal money, and that actually matters to KDOT. So the grant, for lack of a better term, isn't any good. But after some working with KDOT, and we'll have to bring it back to the commission for approval, they are trying to change that grant for the engineering cost for the airport. I believe it's $173,000, but that's a 95.5 grant. So rather than just not having the grant, basically we don't get 243,000 that we thought we were getting. We'll at least get 95% of the engineering paid. Then in January, we will reapply for the KDOT Airport Improvement Grant, noting that we're going to use federal funds and put both of those in. The good news is we'll be able to get more money. The bad news is it'll take at least a year before we can start building the hangars unless we find the cost to do that. The next one is fire apparatus. And I just, on this one, I point out that the city entered into a lease purchase for a pumper, which is about $155,000 a year. And that's the one that you approve the payment for the chassis. That makes the total expenditures with that and the other fire truck that we have a lease purchase now from $71,000 in 2025 to $226,000 in 2026, which requires us to levy $170,000 in property tax to make that lease purchase payment. Debt service is the next page, and I just want to point out on that one that some of the projects that we're doing or debt service that we have to do with streets. The utilities that you have, water projects or general obligation bonds for those type are paid from the revenues from the utilities. But when you issue debt for streets or anything in the general fund, you have to levy property tax to pay that debt. And for 2026, it'll require levying $278,000 in property tax. The library, there is a 2-prong test that for them to get the state grant. One is either you increase their mill levy or 2, you increase their revenue. As the budget's proposed in 2025, they're expected to get $607,250. In 2026, they're expected to get $615,000, which makes them eligible for the grant. Doesn't show it on here, but on the workbook that we use from the state, it shows, yes, they qualify.
What is the amount of that state grant?
I'm not sure. I still haven't checked.
Okay. Is it a nominal amount? Probably, like Wendy's looking at me back here. Is that less than $10,000? Okay.
And then on the next page, a schedule of transfers for 2026. Another way to cut expenses. You can see that in previous years, the general fund has transferred money to the tree program. In 24, it did not in 25, and we do not have it in 26. Capital improvements, nothing in 24, 25, or 26. General fund to the sales tax street fund, special highway fund, those 4 that I talked about earlier. Again, we're not going to do in 2026. So some of the things that we've done to reduce that, right now the mill levy is at 47.5, I believe 4, and I will send you the exact number. I thought I printed it out, but it didn't. It's below the threshold that you sent. It is not near the revenue neutral, which I believe is 43.5. For us to get to revenue neutral, we would have to cut an additional $300,000 out of one of these, the general fund, the library, airport, fire apparatus, or debt service. Some of the things that we've done that to reduce this is we have an existing contract for a lobbyist that was removed. The tree board was getting $5,000 annually. We zeroed that from the general fund and moved it to special parks. Special parks gets revenue from alcohol tax. Sister City gets $10,000 a year. That was moved to zero. Municipal band, $10,000 a year, moved to zero. Special projects, I don't know what that was, but it was in there. $15,000 moved to zero. And park improvements had $15,000 in the park operating budget. That was moved to zero and transferred over to the capital improvement fund. We cut one police officer position, one public works employee position. We reduced building maintenance, reduced the amount of money spent on alleys and gravel, reduce the amount of money that we'll spend on curb and gutter repairs, reduce the amount of money for chemicals for bindweed and flood. That's the levy that we have to maintain, and the Corps of Engineers requires that we keep the weeds down. Demolitions has $20,000 a year budgeted. We reduced that to $10,000, and the sidewalk replacement program was cut in half. Those are just the major ones. And like I mentioned, we're also dealing with a 12% health insurance increase and a property insurance increase over several years from $277,000 to over $400,000. There is no COLA for the employees, and there are no merit increases for the employees. The budget as presented now is under the threshold that you said of 47.556, but you have very little that goes over into the cash reserve into 2027. And I talked with the department directors this morning. Just because we say that this is how much we're going to spend doesn't mean that we will. Generally, when you look at municipal budgets, the budgets are set, and overall, say in the general fund, most places only spend around 80 to 85%. But we keep that up, you'll slowly build up your cash reserve. Are there any questions?
I think you're doing an awesome job cutting expenses here. Have you looked at opportunities to increase revenue other than taxation?
The transient guest tax, yes. We have an issue with collections there, but we're working with the Kansas Department of Revenue, who's working with the owners of the facility to get that back in line. That's one way, because in previous years, we've been transferring $50,000 from the general fund to CVB. Once we get that back in line, we don't have to. In 2026, we're transferring $25,000 from the general fund to CVB. If we can get that in line before then, we don't have to make that transfer. Keeping in mind that the budget is just the maximum expenditures that the commission is authorizing. Doesn't mean that we go into it saying we're going to spend it. If we don't, we won't. And then at the next meeting or the meeting after, I'll bring you a plan, the capital improvement and all the reserve plans that will show you how we can take this and plan for 10 years out and prioritize what we need to move things back around. Because there are a lot of capital improvements that still need to be done. Ultimately, the goal, it's a policy decision for the commission, but fiscally, be good stewards. The ideal goal would be that we pay cash for the projects we do. Now, there's not a lot of cities that can do that. There's some that eventually you're going to have a major expense and you'll have to borrow some. But if you have a $500,000 project and it's on your plan and you save up for it, then we don't have to borrow any money. And that's the ideal goal, is that we can get there and just start paying cash for capital projects. Because I've been impressed by the city of Abilene in the 3 weeks I've been here. You've got a great town, a lot of things going on, a lot of visitors. It's pretty. I mean, you have a really nice looking town, but I'm more impressed with your department directors, because even today, when I was giving them the bad news of everything that I cut out of their budgets, they were still saying, well, I think I can do a little less right here. So they're making every effort they can. And we're talking, I can take $100 here. I mean, they're trying very hard. And depending on the feedback I get from the commission today, I plan on meeting with all the departments or all the city employees and putting them a little bit at ease, because there's a lot of things going around about positions being cut and cross training and all this. They're doing a great job. They really are. Any questions? Any changes that you'd like to see?
I do want to just clarify a couple of points here. So you said that we will have to levy for debt service.
Yes.
Specifically, my concern is surrounding the bonds that were just approved. So even though we're theoretically going to be having some income from holding those funds short term, we still have to levy for the debt service.
Prior projects that you have,
Only prior project.
only prior projects. The bonds, the temporary notes that the commission just approved, the capitalized interest will take care of those payments for 2 years. But in 2028, the commission will have to issue general obligation bonds for whatever we can't cover. And ideally, and I don't have the numbers in front of me, but if we can find additional grants between now and 2028, that lowers the amount you have to bond. I do believe you're going to have to bond, I think it was $7 million, but we can get that down. We'll hit the ground hard looking for grants on things we can do.
Of that $7 million, certainly there's, if I'm remembering correctly, about 750 of that was the interest, the capitalized interest.
Yes.
4 million for ball fields, 1.1 million for the proposed street projects, and 750 for the industrial park. Is that, am I close on that?
Yes.
750?
750,000.
Would be more
That's-
for the
For the
industrial.
3.25, but 2.5 is reimbursable from commerce.
Okay, yes. Yeah. And you have 800,000, I believe, for the street project. So 1.1.
Yeah, 1.1
yes.
plus the 8. Then we've talked about our goal is to get potentially some funds from the sales of those lots.
Yes.
That should help as well.
And I think there's other grants out there that we can look for. And worst comes to worst, we bother our federal officials and ask them for some CDS. I know a lot of people don't like it, but I had, well, I'll just use his name because maybe he'll yell at me, I don't know, but Senator Moran called me several years ago for a $13 million CDS at a previous place I worked. And he told me that I don't like it, but he said, if they're gonna do it, I'm gonna get something for Kansas rather than, how we make honeybees on the West Coast sleep more than 6 hours a night or something like that. So conservative as far as trying to save money at the federal level, but he's also pragmatic. He knows that if it's going to go, he might as well get what he can. So, and you've got 200-year-old water towers or about a $13 million project that, I don't know, maybe we just ask him, hey, can you help us out? Worst he can do is say no. If you have any questions or comments after you get a ton of phone calls tonight and tomorrow and the next day for everything I just said we're cutting, let me know. The idea is to bring back the enterprise funds, your water, storm, sewer, those. They're not any better. I'm just gonna put it that way. So, but we'll get there. And then we'll bring you a full budget. And then if you agree to it, then ask you to publish in the notice of public hearing or actually publish the budget. The hearing's on September 8th already. We'll get there. It's just going to take us more than a couple years. It'll take us several years, but you've got a great team of department directors and employees that are working hard to make it happen.
I appreciate all the work you've put into and all the communication about it. So
Thanks.
Okay, do we have any questions on the tax levied funds budget review?
I will offer that if you get questions from your constituents or somebody just wants to come in and ask, I'm more than happy to go through this with anybody that wants to come down and go through the budget line by line.
Just really quick, I did make a note here as you were going through this. I think we had identified, or I personally feel on the airport specifically, that the rental rates probably don't reflect a market rate for that type of facility. So if you're looking at other revenue opportunities, that's certainly something I would be looking at.
And I'll send out a thing on the listserv, see what other municipalities are charging for theirs also.
Any further questions? A lot to chew on.
Thank you.
Thank you. I would consider a motion to adjourn.
So moved.
I'll second.
Motion has been moved and seconded. Do we have any commission discussion? Seeing none, we'll move to roll call vote. Commissioner Koloff,
Aye.
Commissioner Meisenberg,
Yes.
Vice Mayor Miller,
Yes.
Commissioner Witt,
Yes.
myself, yes, motion carries. We are adjourned.